All right, ladies and gentlemen, I got your watch list coming in at September 27th, 2019, and we have a lot to talk about. And yes, I believe the stock market is going down. So we're going to go over the keys for tomorrow. I have a lot of plays that we made today. We actually made surprisingly a big amount of plays. I didn't even really think about that. They were credit spreads and a few plays that were even naked. But I also want to talk about what I'm expecting for tomorrow, and even more importantly, if what I'm expecting doesn't occur. So quite simply, we saw a lot of things today. I'll even draw it out and show it. A lot of it, I believe, is still related to the impeachment. I talked about that earlier. I think that is still in play. We had positive news today on trade, and it just didn't hit the same, and it's kind of a clear indication. And why I'm saying tomorrow, if anything, we're going to see a Friday liquidation. Last week and even so far this week, we've seen almost equivalent market liquidations as we have in August. The yuan, the Chinese currencies at a crucial level, but pretty much we're either going to see an action coming into this weekend. Either people are going to really be risk off and we're going to see kind of how this sentiment bakes in, or we could be listening too fast and it will be a cuck fest volatility. Maybe, who knows? I mean, all it really does take is a little bit of fuel up and people are going to say the road to 300's back on. So we will see. But let's talk about this. Let's talk a little bit about what happened, and let's go over the play so you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed because we are going live Monday through Friday, 30 minutes before open. We're going to be here in the morning going over the watch list, so make sure you do the most important thing, which is post your watch list below. Stay hyped, stay ready. If you're not familiar, there's a few concepts here at hand, or 3 concepts you're going to need to know, or pretty much tools in our tool belt, our arsenal to take advantage of some of what we're going to be seeing tomorrow. There's going to be understanding the frog, so you could spend tonight or even in the morning searching the trading fraternity frog. You could search push it to the wall. That's the next thing, and that's what we're going to see playing these Friday expirations. And then finally, credit spreads in the tutorials on spread. So depending on what tomorrow throws out, we're going to have to pick which strategy, and we're going to have to determine which tool will be the best. But let's get into it. Right off the bat, for the keys, if it doesn't go down tomorrow, that is good news. This is related to my theory. I'm expecting that the uncertainty created from this impeachment thing is creating a whole nother level of shock or shockwaves investors haven't seen. And if there is real panic and there is a real issue with liquidity or whatever it may be, people are going to go toward the exit on Friday. The volume and weird moves we've seen so far this week are kind of pointing at that. So if people are going to exit tomorrow, that is negative. So even though I'll be right, that will be negative overall. But if it doesn't go down tomorrow, that is good news. And if it does, that's going to be pretty much a hint at the volatility next week. Or it could start hinting and proceeding even a down Friday, down Monday, which we kind of saw at the beginning of this week, but it was a little bit shy. And then we saw the bounce up there as the market started. Literally, the market started to do the bounce up until we got turned on after hours. It pretty much did it all up until Tuesday. You know, we came down Friday. It was a weird move there on Monday, and then it went up. After hours was good, but then literally it was all impeachment news, and as that came out, that kind of killed everything. So watch out for that, and this is what I also brought up here today. It's related to the next thing, but the impeachment zone is real, and this is what I want you guys to be paying attention for, and this is really what's going to show us stuff tomorrow. I feel like such a dirty technical trader right here. I'm just kidding. You're not dirty if you're a technical trader. You guys just know this isn't what I do a lot. But this is what I'm trying to show. This is the impeachment zone. My trend lines are a little off there, but you could see this is when all that impeachment stuff occurred. We barely have been able to go above it. It hasn't really held above there, even with now the catalyst. So if we are trading in here, we could totally cuck and see that tomorrow. But again, if there is a real rush and uncertainty, this is where people are going to start reacting, especially around these levels, because this is when it really started to drop and the rebuttal came. So in between 297 flat and 295, that is going to say a lot. So keep your eye out for that and keep your eyes on for that. But again, if we do see a run for the exits tomorrow, this could start to kick off volatility coming to October or even the week after. Like I said, I could be listening too fast. It's easy to be early on this type of stuff. And some of you, if you ever watched my videos, especially as volatilities came up, if some patterns keep showing themselves, I'm usually on it. I don't even want to say I'm usually on it. I mean, just while you guys know how I am with it. But if anything, I give myself a buffer zone. It's just like the stream alerts too. And all of these videos are sponsored by stream alerts, baby. Shout out to stream alerts. We love y'all. Better to have it not need it than need it and not have it, especially in these volatile times. But in all seriousness, though, that there is going to be potentially a window. So that's why it's going to be scaling in, and that's why we're going to be using the strategies there. But if anything, too, October 15th, this is going to be the last week of September we have trading. Technically, we will have Monday available. So again, but September's pretty much over. But then next week or the week after that sets us into October. But October 15th, we're going to hear more about the tariff deadline and where that might come back into play. But again, we did have positive news here today. And this is where I say the impeachment zone is real, because today showed positive news had only so much of an effect. And this is showing the impact, because we didn't break out too heavy. We did see this like weird run up today. And this was off of news early in the morning. We had news that China, something about a positive deal with China. The market didn't react because, again, the whistleblower statements, it was that Pokemon type-esque move we were talking about yesterday. It's chess. One person goes, the next person goes. But we had positive trade news 2 times in the day. The second time when it hit, it just didn't have the same effect. This is telling us something, and that's where I like that as evidence. So keep your eye out for that. And now even understanding how to play this. This is going to come into tomorrow, the next few weeks in general as well, too, especially tomorrow. And this is the key. With tomorrow, I need you guys to be smart. If it doesn't happen, it doesn't happen. I don't want you to go too ham, be like, oh, I thought it was going to come down. Even if it does start to pick up fast, you cannot deploy all of your money. Make sure you get time, and we got to go literally $30, $50 at a time. This is the key with options. I said this on the 11 at 11. You are going to blow up your account if you miss this. Options is like gasoline in a small spark. You just need a small amount of money. A small spark in the right option will set ablaze a bunch of oil or gasoline that's there. You don't need, if you wanted to start a fire with gasoline and matches or a fire, the flame doesn't have to be as big as the catalyst. So that's where I'm telling you guys, you could go a little bit at a time. And again, if I'm saying I have a 2-week buffer, space out. Imagine if you wanted to put $200, how just space that out over the next 3 weeks or 2 weeks at the very least, and you will get something. And now that's what we're talking about. How the move comes, the volatility or downside can occur, but it could be muted. It could be a slow walk down. We kind of do resemble a little bit of October or more so August here, but it's kind of happening a little bit slower. You see, we've taken the same move down, but instead of doing that in 3 days, it's done it in 6 or 7 trading days. So keep that in mind. So how you play that, you got to be smart with the strategy. And pretty much if we see big velocity, I'm going to buy options. But if it just kind of overall kind of start turning down, and then again, we start to see some negative effects from this, I'm going to mix it in with credit spreads. That's how we've been doing it. And really, if you're going to buy anything, I would do a $2 to $10 ratio. So pretty much for every $10 you spend, you could do $2 on a weekly or short term, but pretty much everything else I'd go on monthly. So if I spend $10 on weeklies, I should at least have spent $100 on monthly contracts. I'm saying some of these November puts, even the October, the 2-week, watch October 18th. Those are only 2-3 weeks out, and those could be good. Those could actually gain a lot of money, but those are still risky. But some of the November contracts are very, very solid. So keep your eyes out for all of that, but let us get into the plays. So honestly, I don't even know where to start. We had a ton of plays, and you see, we've been making moves with the credit spreads here. I guess I'll start right off the bat. Here's the YOLO demon. So if you are on Tastyworks or a different brokerage, you could still play this tomorrow. Unfortunately, if you're on Robinhood, you can't do this. And this is where I brought up that strategy last week, kind of playing contracts that expire the day before and using that. And what I did, we did a risky one. It was an Apple 220, 225 call. So this was the full degen play is what I'll call it. Because when we sold it, Apple was at 220. So pretty much it's at the money. The key with this play was we got to collect $88 in credit. So tomorrow, if this drops and it falls out the money, and it pretty much closes below $220. Or again, think about it. If we collected $88, it could close at $220.80 and we'd lose no money. Anything above that, if it goes back to $225, we could lose up to $100. And again, Robinhood will close us out. But playing this as a short term, I did that play. I really liked it. Again, you might be able to pick up some of these tomorrow. However, it doesn't mean you can't even pick up any of these other credit spreads playing Apple. And I did make another credit spread on Apple. I did an October 18th, 215, 217 spread. So I didn't do this on the small Robinhood account because I didn't have enough buying power. And I got a little spread hungry. I got a little spread hungry today. Again, and this is how I want to set up myself coming into this. I'm even cutting out. I had a lot of spreads, but some of the spreads I had, they were bullish in the sense that I sold credit spreads on puts. I even flipped some of those and I still kept my spreads and I played some of the same companies, but then I switched it to selling credit spreads on calls. Whereas, yes, I think the market could still go up, but I'm kind of capping it and saying I'd rather collect premium that it's not going to go up too high. So understand that you could still play a bounce with these credit spreads without going crazy. But this play, I'll show you that next one. But this play, another one on Apple, and I might grab another one. Again, we'll see what we could close out because tomorrow we'll be able to close out some buying power. But I sold a 215, 217.50 for $1.65. So it's again 250 risk. Pretty much the max risk is $100 on that for October 18th if we do drop. And I think Apple, it's kind of my prime candidate if we do start to see volatility in the market drop off. You can see in my eyes it's pretty much diverged. So it's kind of holding up with the SPY, but then you see Apple and now compare it with Amazon, or now compare it with Netflix, Facebook, Google. Wow, Google's actually on par. But as far as tech goes, Apple could probably take a hit. So even Google's up there too. That could be saying something. Maybe we should look towards there. But that's the other one I played. On the reverse end, we cut out of a profit today on McDonald's. Remember, I sold in the money 215 puts, and today it went up above 215. We were up on it. I cut it out for like a $40 profit, which was still like 30% or something. But then again, that one expired next week, and I could have kept holding it. But what I did instead, I was getting kind of worried here with the market, and again, just how the impeachment stuff and back and forth was going. So I sold a 210, 212 call. And again, these ones aren't the best examples of saying that, hey, you could do call credit spreads and bet against the market, or essentially bet that the market could still go up, but not too much, because I'm selling in the money. So I sold a 210 and a 212, saying pretty much by October 4th, if I sold the 210 call, I'm saying that it's going to pretty much cap out here and come back down below 210. But we collected $185 in credit, so the max loss on that $65. You see, we have a Roku play here. This is the one we made yesterday. Remember, we said we got $25. It expires tomorrow, so if Roku doesn't go up $10 tomorrow, pretty much we get the remaining $8 on this, and we'll see what it's at tomorrow. If I could close it out for maybe $1 or $2, I will, but who knows? But either way, that should be good. We're still holding the Iron Condor. The Disneys went down on me today. Which one? I don't think we opened up any other ones here. I think that's about it. And then we held the Anthems. But then lastly, I think I did make. We did a trade on Tesla. Yeah, I did all these because I tied up the buying power on the small account. And hopefully you guys are seeing, with a account that's smaller, even credit spreads, they do tie up some premium here. So you got to exercise patience, and you can only use so much. But we sold the Tesla. I sold that Tesla was popping up. They had news that they're going to, and I think they're announcing a new software update, and they had positive news that they're going to be having a leaked email said like they're the best quarter from Elon. But I sold 252 calls for next week, and we got $55 in credit. They're now trading at like 65, so we're down about 40% on those. That one has a $250 risk. We collected $55 in credit, so that one's only $200, but that one had a higher chance of odds because 250 is still a high level. That still has time decay. So even though it's going against us, the thing is, there's still time decay, and the stock has to end up above 250 by that day. So a lot could happen, but we'll see. And then again, I did the same thing here with Home Depot. And I forgot. And we did the Micron. You see, so again, we did a lot of plays here, but I sold Home Depot calls. I sold again in the money ones. I sold 227s, and I bought the 230s. So again, another in the money play, saying pretty much if Home Depot drops below 227, we'll make money. And I think I collected $150 in credit. So again, most of these are about $100 risk on Home Depot, McDonald's. Those offer good premiums to make $150 or so bucks. And then lastly, we played earnings on Micron. And again, I did it again, except for pretty much the Tesla. Tesla one, we collected less credit, and that was further out the money. And again, if none of this makes sense, watch the spread videos or come on stream. But you guys will see how this strategy is going to benefit. But I did Micron earnings. So when I sold what I did, this was expiring tomorrow. It was a risk. I sold the 47.50 calls in the money. And you guys are going to see why I did this. This was playing earnings in a risk-defined way. And again, the reward was very low. So this contract expires tomorrow. I sold the 47.50. You could see this thing was in the money. That's why it had such an expensive price. But now that the stock has moved after hours, it's out of the money. But we sold the 47.50, bought the 48. I collected $25 credit. The max risk was $50. It was a 1-to-1 ratio pretty much. But now it fell out the money. We're going to come away making $25 on that. Again, this is all following in line with that. If you put it in a perspective, that Micron play, that Roku play, that both, if those are most likely a really 90%, 95% chance of expiring worthless tomorrow, walk away with like $50 in free credit, $50 a week like we talked about. And then now I even pulled down and I YOLO'd that into the Apple play. So if anything, if we lose on the Apple play, that will pad it and we'll walk away with nothing. But you guys see how some of these credit spreads, with the market didn't really move much, but we're walking away with, we could walk away with a pretty decent week. But again, I did go ahead and gamble on that Apple one. That was a degenerate one. And now as far as the last play that we made, and hopefully, man, there's a lot of plays today. I got CrowdStrike, November 15th, $40 put for 35 cents. And I got them because CrowdStrike is literally at the middle in a lot of this politics stuff. They're an IPO. They're hitting this low level. I mean, it just has a lot of bad things going for it, really. It's just not good things. So I didn't. This is the whole scaling in aspect. I believe this could turn into something big, but we'll go week at a time, $30. We'll see what happens in a week or two. If we're up, we're up. If not, we'll see what happens. And we can maybe average down, or we let it go, or again, and maybe we turn some of this into a spread or something. But it's at the center of all of this drama with the politics and all that. And I thought this was pretty decent. And I like the fact that it's an IPO and about to fall through. So those are the plays we made. Watch all these. We're going to be covering these all tomorrow because we're going to have a lot of activity in the morning. So make sure you're there even throughout the day. And I want to take advantage of where the market's at and all these spreads in general. So we got that. Now as far as what to watch tomorrow, watch UVXY. This is even going to relate to a few of the plays. I'll even talk about it right here as well. Anthem, UVXY and Anthem, both of these we brought up yesterday. My Anthem puts came out of the grave. This was a debit spread we bought a long time ago, but if you remember that Anthem, we did an in the money Anthem call spread yesterday. I talked about that on the watch list here yesterday, and we collected like $190 of credit. That play by today, I think we closed up like $50, $60 on it. Anthem's really dropping. Again, watch healthcare. That's even the title of the watch list yesterday. They're now at these crucial levels. If they start to break here, this could get ugly, and this could start to signal something here. But coming back, as far as the play goes, you could watch the debit spread or watch these credits, because this debit spread was even worthless at one point. It was like, I think it was even worth less than saying 12 cents. I think they were 5 cents. They came up, then they came back down. So watch those. Same thing even with these UVXYs. We brought those up. These were expensive and then cheap. So we could see these October 18th, you guys. It's even saying something, I think, about all the plays in general. You hit the October 18th during a bigger velocity move, or if you're right on the direction, they will increase in value quickly and go very, very cheap. But then if you don't sell out quickly, they will fall out. So we might be focusing a lot on October 18th, both selling premium, buying, and then buying and maybe even turn into the spreads. We'll see. But watch both of those, UVXY, Anthem, Healthcare, even Cigna. They're dropping a little bit more as well. So keep your eye out there. Watch TLT and the banks. Again, TLT October 18th, same philosophy. And now if it starts to hold up, again, this 143 level is going to be crucial. So how it plays out there is important. So I want to watch how it moves here and then what the options do. But if we start to see a move tomorrow, you can see it's kind of basing around there. And if it does go up, I mean, watch that. Even watch SLV and the commodities, and then also watch banks. They're kind of, you see, they're all stopping. They're getting their composure. They're all at crucial levels. So whatever happens here tomorrow, it could do nothing. That's why nothing is still on the cards for tomorrow. But if there is a move, these are going to be some of the plays you want to watch, and keep your eyes out for that. And then even this is a kind of a side one, E-Trade, Ameritrade, Interactive Brokers. They said that they're coming out with free commissions, and it killed these companies. I don't know why. I think this is overreaction. So some of these companies that drop a lot, it's going to even relate to another play here. We could play those on the credit spread, just take advantage of them being down. That's been the whole strategy we've been doing here. And that even reminds me, Beyond, we bought those puts yesterday. Again, the same $30, $40, those expired worthless. It shot up. Someone asked, what would the strategy be? I would think about cutting and I would think I'm gonna lose out of that one we bought. But now this thing shoots up 10%. The calls are gonna be expensive. If something makes a big move in a direction, it could be in your advantage just to sell premium as it's going up there. So it seems counterintuitive, but they're gonna be opportunities. But watch that. Watch Roku. Again, it clipped at 102. It's holding 100. So if it falls below 100, I want to see what happens. And if we sell credit spreads, I'm kind of nervous on that call, but we have that one that'll expire, but we'll see what happens and just see if there is any risk off. I like Walmart. It's kind of in the same category here. And Procter Gamble actually looked decent as well, too. It's doing the best out of a lot of these, but this is kind of like those McDonald's and Home Depots. You see how we've been going after those week after week with the credit spreads. Those have been giving good play, so this could produce something as well, too. And then lastly, NVIDIA. I want to watch them. They had an after-hours move based on Micron. I think did they bounce back? No, they dropped. So watch them, Intel, and any of the other chip makers. Those are going to be good. So That is your watch list, ladies and gentlemen. It's a lot to take in. There's a lot of plays. There's a lot we have to do, a lot we have to prepare for. I told you last week our work is cut out, so hopefully you're ready. Control those balances. I got your back. You just got to stay alive. That's all you got to do. Little by little, be hard to kill. Nothing is more annoying than the account that they can't blow up, baby. It's game time. It's war. We ain't going to go out like that. Control the emotions. You know I got you. You know the code loves you. You know Chad loves you. So make sure you guys are ready to go. Like the video. Post your watch list. Get ready. Let's go. Read your Proverbs. Let's go!